Hey guys, how's it going? Welcome back to my Robinhood portfolio. Another day in the red, unfortunately, down about $17 today. And as you can see here, I traded down all day. Actually, from market open, fell quite rapidly there, 15, 20 down, and it kind of stayed down throughout the entire day. I wasn't able to make my gains back near market close as I have been doing over the last couple days. But overall, if we take a look at my entire portfolio, a lot of red throughout it. The market overall was down. The Nasdaq, S&P 500, all the major indexes were down. Starting up here with some of my ETFs, going through some of my healthcare stocks, my financials. GM and Ford actually were up quite a bit today. 0.6, zero point 0.3. I consider that quite a bit. AMD down a bit here. That was actually bought because of user suggestion. They came out with a new chip that supposedly is on par with some of the much more expensive Intel chips, so kind of a competitive advantage, if you will, for the bargain buyers with regards to some of those chips. But down a bit today, railroad, and then on the bottom here, some of my bond funds. And as I mentioned yesterday, I'm going to try to do this strategy of dividend capture. Basically, I've selected 4 different high-yield bond funds that I'm going to be buying, trying to capture the dividend for that, and then selling on or after the ex-dividend date, and then buying the next one in my list. So I've got 4 of them. The first one here is this Fallen Angel high-yield bond fund. The ex-dividend date is tomorrow, so I went ahead and bought that yesterday with the whole idea I'm going to keep it through the ex-dividend date, capture the dividend, which will be about $15 to $18, depending on what they declare for the dividend at some point today, and then selling it tomorrow. It's down overall return of $7. It's still going to be a net profit for me capturing that dividend. So even if I sell this tomorrow for $28.72, I'll still be making back my money. Not a lot, but I only have $3,300 invested. So it'll be a nice little return. Again, I'm not sure if this is going to really pay off in the long term, but the whole point of having this Robinhood account and posting these videos is to have a little bit of fun, try out different investing strategies. So give me your thoughts if this is a good idea or not. Again, just kind of having some fun here. So what I want to kind of talk about today is this whole idea of short selling. And just a quick review. Short selling is essentially you're borrowing a particular stock from a brokerage and then reselling it, hopefully at a lower price. So you're essentially predicting that a particular stock will go down in value. So the brokerage would essentially lend you a particular stock. So let's say a stock is trading at $50. Well, the brokerage would lend you that. You'd sell it right away. So you have 50 bucks. Then you would hope that stock would go down. So let's say it went down to $30. Then at $30, you buy that stock back and then give it back to the brokerage company, and essentially you made that $20 there because $50 you sold it for, you bought it back for $30. That $20 difference you keep. You can multiply that by as many times as you had gotten that stock. The only downside is, and you can actually lose quite a bit of money. I think that's probably why it's not enabled here in Robinhood, is that if you got that $50 stock, sold it for 50, then it went up to 80. Well, you'd have to actually buy that back at 80. There's a certain amount of time for which the brokerage account will let you keep the stock. You can't just keep it indefinitely. You'd have to buy it back, so you'd actually be losing $30. You would have gotten 50, bought it back for 80, so every stock that you had borrowed, you'd be paying a negative 30. So it's quite risky, and I think that's probably why it's not enabled here in Robinhood. But just because you can't short stocks in the traditional sense, you can still buy into these funds. They're essentially inverse exchange traded funds. So they're basically trying to do the inverse of the market. So they're accounts, kind of like ETFs. It's going to be much more complicated than what I'm saying here, but they're essentially ETFs that at the end of each trading day, they basically try to recalculate the investment by shorting. So they invest in a diversified number of stocks in particular categories, as you'll see here when we go through some of these stocks. And they essentially try to short the stock for a period of time. And when talking about these, there are some ultra short, they're short. A lot of these funds will hold these stocks for a different period of time. But the whole idea is doing the inverse of particular funds. So you have an inverse S&P, you have an inverse Russell 2000, inverse NASDAQ, a lot of different funds. There's actually quite a bit of these. But the whole idea is that you're hoping that the market as a whole goes down, or a particular a segment of the market goes down. For example, real estate or industrials or healthcare or financials, anything like that would go down. You need to make some money off of that. So having said all of that, let's just kind of go through and take a look at some of these particular funds. So the first one is short QQQ, and this is trying to do an inverse of the NASDAQ 100. So PSQ here. There it is, ProShares short QQQ. And you can see here at the bottom there, you can see it provides an inverse exposure to the modified market cap weighted index of 100 of the largest NASDAQ stocks. So again, it's just trying to short a lot of those stocks. It recalculates at the end of the day. It does this daily. So as the market goes down, you actually make money. So it's sort of an inverse relationship. And not surprisingly, as the market has been doing quite well this year, you can see that the fund is down about 16%. So that really indicates that the NASDAQ has went up 16%. So if we think the market's going to be going into a sort of a bear segment here, this would be a great fund to buy. And like I said, there's a whole host of these different funds here. Another one, oops, let's go back to the search function, DOG, ProShares short Dow 30. So this is essentially shorting the Dow. And again, there you see on the bottom, inverse exposure, price weighted Dow Jones Industrial. This is a little bit smaller, only 30 of the largest U.S. companies contained within the Dow. So again, this is probably going to be negative yet over the last year because the market has been doing quite well. But again, if we think the market's going down, this would be a great one to buy. Let's search a couple more here. RWM, let's see if we can't pull that up here. There we go, ProShares short Russell 2000. Again, market cap weighted index of U.S. small cap companies contained within that particular metric, the short Russell 2000. So kind of a cool little thing, and it's a little bit more interesting. You can actually do things like this. Let's go ahead and put in SRS. There we go, the ProShares ultra short of real estate. So if you think the real estate market's going to down, you can buy this particular one. Likewise, let's search for the symbol RXD. There we go. You can short healthcare as well. So there's a lot of different industries you can short. There's also some international shorts, emerging markets, for example, or particular countries. Actually, I'm interested to see if this will actually pop up as well. Let's do the UGL ticker symbol here. See if that pops up for us. Yep, there we go. ProShares Ultra Gold. So you can see there, you can actually do this with gold and many other things as well. So a lot of different things that you can do. So if you think you want to try to dabble in some short selling, you can actually do that on Robinhood. You can't do it in the traditional sense, but you can definitely buy into some of these shorting ETFs, otherwise known as inverse exchange traded funds, so inverse ETFs, to kind of get the benefit of doing some short selling. So yeah, that's kind of what I wanted to talk about, kind of introducing this idea of shorting in Robinhood. Again, you can't do it in the traditional sense, but you can definitely buy into some of these inverse ETFs. And then kind of commenting on my bond fund strategy here, trying to capture some dividends and making a profit that way. Maybe a mistake, but again, I'm only using a few $1,000s here, kind of playing around with it. Bonds typically are pretty stable, so I think this strategy may work, but again, there's some tax penalties. Some longer term, more educated investors may think this is kind of silly, but again, I'm having some fun here, playing around with Robinhood, posting some of these videos to get your guys' thoughts. So if you like this video, as always, subscribe, really helps me out. Leave a thumbs up, give me a couple comments. Later this week, I'm going to be doing another buying session with user suggested stocks, so definitely need a few more of those. I got about 3 that I think I'm going to be putting in limit orders for, but I definitely need a couple more. So if you have any ideas, let me know. So again, subscribe, leave me a comment, leave me